Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency landscape experienced significant movement today as artificial intelligence tools began playing an increasingly prominent role in market analysis and prediction. ChatGPT's latest algorithmic assessment has identified several promising digital assets poised for explosive growth, with particular attention focused on Bitcoin Hyper, a new Layer 2 solution designed to supercharge the Bitcoin ecosystem. This development represents a fascinating convergence of AI-driven market analysis and blockchain innovation, suggesting that automated intelligence systems are becoming sophisticated enough to process vast volumes of crypto data, news, and social sentiment within seconds to identify breakout opportunities. Bitcoin Hyper's emergence as a top pick reflects the growing demand for solutions that address Bitcoin's long-standing limitations in transaction speed and smart contract functionality. The project's integration with the Solana Virtual Machine promises to bring blazing fast transaction speeds and ultra-low fees to the Bitcoin ecosystem, potentially revolutionizing how users interact with decentralized applications built on Bitcoin's infrastructure. The pre-sale success, having raised over $7 million, indicates strong institutional and retail interest in bridging the gap between Bitcoin's security and modern blockchain functionality. This development could significantly impact the broader Layer 2 market, potentially driving increased competition and innovation as projects race to solve Bitcoin's scalability challenges. The artificial intelligence analysis also highlighted Crow, a viral meme coin that has captured the chaotic spirit of internet culture and translated it into blockchain tokenomics. Despite broader market volatility, Tro demonstrated remarkable resilience with nearly 200% gains over a 7-day period, proving that cultural relevance and community engagement can sometimes outweigh macroeconomic pressures. This phenomenon underscores the unique nature of meme coins in the cryptocurrency ecosystem, where traditional fundamentals take a backseat to viral adoption and community sentiment. The success of such tokens suggests that the cryptocurrency market has evolved beyond purely utility-driven investments to include assets that derive value from cultural significance and social media presence. The broader cryptocurrency market today witnessed a notable rebound, with Layer 2 tokens leading the charge in what appears to be a sector rotation towards scalability solutions. Ethereum experienced a significant surge, briefly breaking above the psychologically important $3,700 mark, while Bitcoin maintained stability near $114,000. This movement represents more than mere price action, signaling renewed confidence in Ethereum's ecosystem and its associated scaling solutions. Mantle emerged as a standout performer, with gains exceeding 16%. While Zora and Optimism also posted impressive increases above 5%, suggesting that investors are increasingly focused on projects that address blockchain scalability challenges. The performance of Layer 2 tokens reflects a maturing understanding among investors about the infrastructure requirements for blockchain mass adoption. As decentralized finance applications become more sophisticated and user bases expand, the demand for efficient, low-cost transaction processing has intensified. This trend could accelerate the development and deployment of additional Layer 2 solutions, potentially creating a highly competitive landscape where network effects and user adoption become critical differentiators. The market's positive response to these technologies suggests that scalability solutions may become increasingly valuable as the blockchain ecosystem continues to expand. Corporate adoption of digital assets reached a new milestone today, as C2 Blockchain announced surpassing 200 million dog coins in its treasury reserves, officially establishing itself as the largest publicly known corporate holder of this Bitcoin-native digital asset. This strategic accumulation represents a significant bet on the cultural and technical resilience of meme coins built directly on Bitcoin's blockchain, suggesting that corporate treasuries are beginning to view certain digital assets as legitimate reserve holdings. The company's conviction in DOG Coin's alignment with Bitcoin's security model demonstrates how corporate strategies are evolving to embrace blockchain-native assets that combine cultural relevance with technical innovation. This corporate treasury strategy could inspire other publicly traded companies to diversify their digital asset holdings, beyond traditional cryptocurrencies like Bitcoin and Ethereum. The decision reflects a sophisticated understanding of the cryptocurrency landscape, where cultural significance and community-driven development can create substantial value propositions. As more corporations consider blockchain-native assets for their treasuries, this trend could provide additional price support and legitimacy for projects that demonstrate both technical merit and cultural staying power. Meanwhile, regulatory developments took center stage as President Trump prepared to sign an executive order targeting discriminatory banking practices against cryptocurrency companies and conservative groups. This landmark directive aims to address the long-standing issue of debanking, where financial institutions have systematically excluded crypto-related businesses from traditional banking services. The order is expected to task regulatory agencies with reviewing and revising policies to prevent ideological discrimination in financial services, potentially reshaping the relationship between traditional banking and the cryptocurrency industry. The implications of this regulatory shift could be profound for cryptocurrency market liquidity and institutional participation. By ensuring that crypto-related businesses have access to traditional banking services, the executive order could remove significant friction points that have historically limited the industry's growth. Enhanced banking relationships could improve access to capital for cryptocurrency platforms, facilitate easier fiat currency conversion processes, and provide the stability necessary for institutional investors to increase their digital asset allocations. This regulatory clarity might serve as a catalyst for renewed institutional investment and could contribute to increased market stability as legitimate cryptocurrency businesses gain access to essential financial services. The cryptocurrency rally extended beyond Layer 2 tokens, with major digital assets posting impressive gains across the board. Solana, Dogecoin, and Avalanche demonstrated strong performance, rising between 4 and nearly 8%, indicating broad-based investor confidence in the digital asset space. This coordinated movement suggests that positive sentiment is spreading across different blockchain ecosystems, rather than being confined to specific sectors or technologies. The rally appears to be driven by a combination of regulatory optimism, technological advancement, and increasing institutional adoption, creating a supportive environment for sustained growth. Ethereum's particularly strong performance, jumping over 6% to reach $3,728, reflects growing confidence in the network's long-term prospects and its position as the foundation for decentralized finance and smart contract applications. The sustained accumulation by whale investors, with new wallets acquiring significant ETH holdings through over-the-counter channels, demonstrates institutional confidence in Ethereum's future value proposition. This accumulation pattern suggests that sophisticated investors view current price levels as attractive entry points, potentially setting the stage for continued upward momentum. Traditional financial institutions are also embracing blockchain technology for practical business applications, as evidenced by Corpay's partnership with JP Morgan's Connexy's digital payments blockchain platform. This collaboration enables faster foreign exchange conversions using commercial bank money on a blockchain infrastructure, demonstrating how established financial institutions are integrating distributed ledger technology into their core operations. The partnership has already proven its value through real-world use cases, including weekend transactions that settled within minutes rather than waiting for traditional banking hours. This type of institutional blockchain adoption represents a significant validation of distributed ledger technology's practical benefits for traditional financial services. By providing 24/7 trading capabilities and sub-30-second settlement times, blockchain infrastructure is addressing real pain points in cross-border payments and currency conversion. The success of such implementations could accelerate broader adoption of blockchain technology within the traditional financial sector, potentially creating new revenue streams and operational efficiencies for both cryptocurrency projects and established financial institutions. The exchange-traded fund landscape experienced notable developments as the Securities and Exchange Commission expanded position limits for Bitcoin ETF options from 25,000 to 250,000 contracts. This tenfold increase provides significantly more flexibility for institutional trading strategies and could enhance liquidity in Bitcoin derivatives markets. BlackRock's iShares Bitcoin Trust stands to benefit substantially from this change, given its dominant position with $85.5 billion in assets under management, more than 4 times larger than its nearest competitor. However, the ETF market also showed signs of volatility, with BlackRock's IBIT experiencing its largest outflow since May, totaling $292 million. This outflow, while significant, represents a relatively small portion of the fund's total assets and followed a period of substantial inflows throughout July, totaling over $5 billion. The mixed signals from ETF flows suggest that institutional investors are actively managing their cryptocurrency exposures, potentially taking profits after significant gains or rebalancing portfolios in response to market conditions. The decentralized finance sector faced security challenges today as CrediX, a lending protocol built on the Sonic blockchain, suffered a $4.5 million security breach. The attack highlighted ongoing vulnerabilities in DeFi protocols, particularly around administrative access controls and multi-signature wallet security. However, the story took an unusual turn when CrediX successfully negotiated the return of stolen funds through a private settlement with the attacker, demonstrating that diplomatic solutions can sometimes resolve cryptocurrency security incidents more effectively than traditional law enforcement approaches. This incident and its resolution reflect the evolving nature of cryptocurrency security and incident response. The fact that the exploiter agreed to return the stolen funds in exchange for a payment from the protocol's treasury suggests that some attackers may be motivated more by profit than malicious intent, creating opportunities for negotiated settlements. This approach could become more common as the DeFi ecosystem matures and protocols develop more sophisticated incident response procedures. Litecoin emerged as a standout performer today, surging over 10% on speculation about a potential spot exchange-traded fund approval and increasing merchant adoption. The digital silver's rise to above $123 was supported by strong fundamental metrics, including accounting for 14.5% of all cryptocurrency payments processed by CoinGate in July. This practical adoption demonstrates Litecoin's continued relevance as a medium of exchange, while regulatory clarity regarding its commodity classification by the Commodity Futures Trading Commission provides a favorable foundation for ETF approval. The Litecoin rally exemplifies how regulatory developments and practical adoption can combine to drive significant price movements in established cryptocurrencies. With Bloomberg analysts estimating a 90% probability of eventual ETF approval, Litecoin could benefit from the same institutional investment flows that have supported Bitcoin and Ethereum ETFs. Additionally, corporate treasury adoption, as evidenced by MEI Pharma's $100 million Litecoin allocation, suggests that the cryptocurrency is gaining recognition as a legitimate treasury asset for forward-thinking companies. Infrastructure challenges also surfaced today as Coinbase's Base blockchain experienced a temporary disruption when block production paused for nearly 20 minutes due to a sequencer malfunction. This incident highlighted the centralization risks inherent in many Layer 2 solutions, where a single sequencer handles transaction ordering before batching and submitting to Ethereum's mainnet. While the network quickly resumed normal operations, the incident sparked discussions about the need for more resilient sequencing mechanisms and backup systems to prevent future disruptions. The Base blockchain incident serves as a reminder that even well-funded and technically sophisticated projects can experience operational challenges. As Layer 2 solutions become increasingly important for blockchain scalability, the reliability and decentralization of their infrastructure will become critical factors in their long-term success. This event could accelerate development of more robust failover mechanisms and alternative sequencing models to enhance network resilience. International expansion of blockchain finance continued with Shiga Digital securing a Dubai International Financial Center innovation license, strengthening its blockchain finance operations across Africa. This regulatory approval enables the company to offer innovative financial services using blockchain technology in one of the world's most forward-thinking financial jurisdictions. The development reflects the growing global acceptance of blockchain-based financial services and the increasing sophistication of regulatory frameworks designed to support innovation while protecting consumers. The partnership between Invenium and Mantra, involving a $20 million investment to build a global institutional real-world asset ecosystem, demonstrates the continuing convergence of traditional finance and blockchain technology. This collaboration aims to tokenize private real-world assets and provide institutional-grade infrastructure for decentralized finance applications. The partnership reflects growing recognition that blockchain technology can provide transparency, efficiency, and accessibility benefits for traditionally illiquid asset classes like real estate, private equity, and other alternative investments. Looking ahead, the Cardano ecosystem generated excitement with hints about an earlier than expected launch of the Midnight airdrop. This distribution, potentially involving up to 24 billion Night tokens across multiple blockchains, including Cardano, XRP, Bitcoin, and Ethereum, represents one of the largest cross-chain airdrops in cryptocurrency history. The scale of this distribution, affecting over 37 million eligible users, could significantly impact multiple cryptocurrency ecosystems and demonstrate the technical feasibility of large-scale multi-chain operations. The diverse range of developments today illustrates the cryptocurrency industry's continued evolution across multiple dimensions, from artificial intelligence-driven analysis to regulatory progress, corporate adoption, and technological advancement. The combination of positive regulatory signals, institutional investment, and continued innovation suggests that the blockchain ecosystem is entering a period of increased mainstream adoption and practical utility. While security challenges and infrastructure growing pains remain, the overall trajectory points toward greater integration of blockchain technology into traditional financial systems and daily economic activities. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.